Hi everyone, welcome back to Level Up with Dawn. Today we're going to be talking about the things that I actually did right, or at least that I think I did, considering everything we've been through, when making investment decisions. So the first thing that I did right was investing in things that I use every day. So whether that be like a telecom company, could be a food company that you always get your groceries at. That is really important because at least if you have the appetite to use it every day, then maybe they will exist into the future because there could be lots of people like you who use their services, and so that means this business could be around for quite some time. Also, what's important is not just investing in single shares. So yes, you can isolate a specific company that you think has great growth potential, but also invest in aggregated markets. So whether it's a unit trust that groups real estate trusts, or maybe it's a unit trust that groups the top 40 in your country's stock exchange. That is important because it kind of covers you, because the way that those unit trusts and aggregated market instruments are made is that they have companies, individual companies in them, or could be bonds, could be real estate trusts, where they've balanced it to such a way where in a negative market you could still see some upside. In a positive market, you will definitely see some upside. In an okay market, you will retain your balance, the actual amount that you invested. So that is something that I think is really important. Yes, find those isolated shares which can shoot out the lights for you, but also look into unit trusts, exchange traded funds, those kind of things. The second thing that I did right was starting early. When it comes to shares, honestly, now is the right time to start. If you have to pause this video to go invest, do so. I fully support that message. Start as soon as possible. I'm not sure I'd say the same thing about property, but start as soon as possible when it comes to investing, especially if you're investing in the stock market. The third thing that I did right was, as soon as I started earning a salary, I made it part of my monthly expenses. So I would put in a debit order with my asset manager, and every month they would just debit money and invest it. And I chose the specific unit trusts and ETF funds that I wanted it to be invested in, and every month, like clockwork, on the same day they took that money. And it's the best thing you can do for yourself, because then it becomes everyday life. When you get your salary, you know you've invested, you know you've paid your bills, you know you've saved, and then what's really left is really available to you to do with whatever you want, and it really is disposable. It's disposable. It's at your disposal, is what I'm trying to say. Because investing is important. It's not something that should be an afterthought. It should be as important as paying your bills. The fourth thing that I did right, is implementing automatic yearly increases. So with my asset manager, I set the monthly amount that I want to be debited, but then at the end of every year, and I've lined it up to whenever my job increases my salary, from that point forward, they increase my contribution. And so you can decide if you wanted a 5%, 10%, 20%. I've put it on maximum 20%, but I would say even 5% is good enough, as long as it's an inflationary increase, because I don't want you guys to be investing less and less in real terms every year. At least increase how much you're investing into your unit trusts, shares, investment portfolios as a whole by inflation every year. The fifth thing that I did really well is reinvesting my dividends. So with my unit trusts, any dividends that are paid from those share companies goes straight back into buying more units of that trust. It's only the single share dividends that I get that don't get reinvested, those are my spending money. That's my splurging money. So where you can, and if you can with your singular shares as well, I personally can't because of my work situation, but if you can, just buy more of that share. That company gives you 2,000 Rand dividends, buy 2,000 Rand worth of shares. And just, if you can automate it, even better, because it makes your life easier, but your money is working for you. The goal when it comes to investing is to make it as seamless as possible, as machine-like as possible. So it just needs to work like clockwork. Money comes in, you already know a portion of it is going out, and that's how you grow your passive income. You want all the systems available to you to be in place so that you don't have to remember, oh, let me increase this, or oh, I just got a dividend, let me just buy some shares. Have it automated for you so that you know, even when you don't remember, you have had your own back in the systems that you have set up so that you can continue to grow your wealth every time you achieve more of it. I will be doing a video soon about the things that I did right in my property investment specifically. But if you enjoyed this video, please don't forget to deposit a like and invest in that subscribe button, and I will see you in the next video. Bye!